Welcome, everyone. How we doing? We'll see how turnout is tonight. People hate to talk about trading psych. Rob's, how you doing? You have a Discord related question. I hope that it's not oh, you can't unmute like in the voice chat? Or you can't unmute right now? I got the button clicked. Let me do a little
Oh,
let me
there it
do
goes. There it goes. It's working.
oh,
What up?
we're good. We're good.
Hey,
Okay.
so my membership expires in October. I'm gonna be moving though, so I'm gonna be spending a grip. I might not be able to renew it right away. My question is like when I renew it, will I still have my little graduation cap tags and stuff into my little you know what I'm
Oh
talking
yeah,
about?
and if they disappear for some reason, just DM me or MMA or whatever, it'll make it happen.
All right, for sure.
Yep.
Know if there's gonna be a Halloween sale? There usually is,
You
but
just dude, the trick to okay, I probably shouldn't make this joke on recording, but dude, the trick to getting to sell is just tell MMA you want a Halloween sell. It'll probably happen. Just
all
tell them
right. I mean,
like
I've been a consistent member for a few years now. Just
oh yeah,
usually,
he's I mean
usually I usually
he's
I
gonna
buy
know
the
your
sale
name.
and stack my membership, so I haven't been able to lately. Just been busy.
Yeah,
Be
he'll know
moving
your name for sure.
for sure, man. I'm looking forward to the psych class here. It's one of my main areas of wanting to learn. So,
Yeah, I
dude,
like
I
this.
fucking banked on open shares today. I grabbed them at the opening dip, and it just kept ripping just all day. It was a great one.
Dude, Open was insane, and that one is so funny because uh this is just not the reaction you would expect off of that news. It's very rare that you see like a big upside move when a company replaces a CEO. But I mean, they got a good one, taking the guy, taking the COO from Shopify. I mean, good work. That's a good person. But dude, this thing's rallying like 100% off of lows. I guess not quite, but pretty much up 100% uh, because they uh, have a new CEO. That's crazy to me. I'm happy people are on that
They
one, and
they
that's
got
on
some
the
they got some original founders, I guess, rejoining the board.
yeah, back on the board. I mean, I'm so, like, I don't know anything about this company or anything about these people, so I can't really give like, I really can't give like a thesis on it. But all I can figure is that the old CEO must have been terrible. And this is what the company needed, is all I can figure with this move. But that's a sick one. I mean, I know both Luigi and Nando have been on that one, so I love it when people,
I'm waiting for them now to say some shit like, "Oh, we're gonna start this crypto treasury too."
yeah, kind of, it's like,
That'll just send it, bro. That's the fucking meta right now, I guess.
yeah, I guess. I mean, that is true. That is true there, Crash. That is true.
What's up, River? How are you, man?
Doing good, man. How are you, George?
Hanging 12-foot sheets of drywall.
Oh, dude, I do not envy you. And my back feels sorry for you. So that's unfortunate. Things are heavy. Welcome, everybody. How we doing? Yeah, I think it's a housing broker. I don't even know. I Googled it one time. I didn't care. I didn't care. I done. But that dude, that's such a sick one. Look at the only levels I had on my chart. I did want to take a trade on it, but that thing has come and gone, huh? That's what I get for waiting for the
Dude, in
retest.
in hindsight, I should have just kept buying the dips, but I've been hopping in and out of trading it, and
Yeah.
if I would have just bought every dip, 100 shares every dip, I'd have been way up more than I am now on that name.
I mean, are they even making money? I mean, at least their losses are getting smaller, their EPS losses. Do they even make money though?
I don't know. The stock made me money. That's all I care about.
Open Door Technologies, huh? I know it's like a Twitter favorite too.
What's funny about this name is I lost money on it like 3 years ago because when it came out, it was in the 20s.
You lost some money on it. I've never even like heard of this thing.
If you go back far enough, I'll tell you. Like I bought it in like 2022, I think, or some shit.
There you go. Oh wow. Oh
Yeah.
it did the run into 2021. Yeah, it's such a classic sign of market top.
And then I didn't know shit back then, and here I am buying some shares. Like, ooh, this looks like a good company. Just
Yeah,
took it
it
on.
was not. It was not. It's like this one. And then DM 99 to $1.50. That's
If I
unfortunate.
learned everything in only options trades, that if I had the knowledge then that I do now, I would not have bought that stock.
Wait, this Open Doors total, what's the Open Doors total revenue is like $5 million. Is that real life? Yeah, I think that's real life. What's the market cap on that thing? Is it just shorted to oblivion and that's why it went up? It's a 7 billion market cap making $5 million in a quarter. That's wild. Well, good to know. Okay, I'm gonna make one more post here. Give me a second, and then we will get to rolling. Uh, 5 billion a year in rev? I don't know what I was looking at. It's not 5 million. I just didn't include the zeros on Yahoo Finance. Okay, well, we are going to get rolling. Welcome, everybody. Happy to have you here. Dirty River tonight. We are talking trading psychology. I think it's something that it's like the main thing people struggle with trading, in my opinion. It's some people it affects you really bad, some people not really a big issue, you stop out when you're supposed to stop out. When you're wrong, and you take the exit on the trade. And so I love doing these trading psychology lectures because generally a bunch of people talk. And we've been over the last 6 months or so. Classes have gotten a little smaller, so I've just been leaving the mics unmuted. And so I always try to encourage people to talk in these. Something that I always try to teach, I mentioned it in my post, is that if you're struggling with something in trading, there's like a 99% chance somebody else is struggling with the same thing. And there's also a pretty dang good chance that somebody in this lecture is likely struggling with the same thing. And so basically for the last, I don't know, 4 or 5 months, I've really been trying to do a trading psychology lecture every single month and try to have maximum group participation. In the beginning, and at the starts of these, I always like to just, talk for a little bit and talk about some of the things that I see. And then I like to open up the discussion. Whenever I teach anything in trading, I always take it back to the charts. It doesn't matter, technical analysis, fundamental analysis, trading psychology, it doesn't matter what you're doing. If you can't line it up correctly on a chart. You know, the days of being able to strictly trade fundamentals on companies are unfortunately, who cares really? But those days are gone, you know. If fundamentals mattered in this market, we wouldn't have things trading at some of the obscene things that they do. You know, PLTR is one of the prime examples. I mean, things wildly overvalued. But it doesn't. Oh yeah, that's a good one, common one. That's people love that book. It doesn't. You know, the days of strictly trading fundamentals, they're really gone. You know, you can of course look for companies at a value to buy if that's what you're into. But if you do that, you're going to spend a whole lot of time not involved in the market and not, you know, potentially getting some of the benefits that the market provides you. And so it doesn't matter what you do. It always comes back to the charts. So when I teach trading psychology, I always try to bring it back to the charts. And tonight I wanted to focus on kind of, you know, the three main things that I see people experiencing, you know, and where trading psychology really goes wrong for people. So the first one is greed. The second one is FOMO, and the third is tilt. I will say, you know, people do tilt on occasion on options still. We see a lot less of it than we used to. And so I'm going to kind of start with that one. It's the saddest one. It's the hardest one to deal with. It's the one that, you know, it makes and breaks traders. So we're going to start there. We're going to get into the less sad ones. But tilt, for anybody who doesn't know what tilt is, you know, it's kind of, it is a newer term for it just because once there was the, you know, once there became this large influx of retail traders, you know, old school guys, the old day traders, you know, the classic day traders, those guys, you know, well, I mean, some of the crazy cry out guys in the 80s were taking massive losses. But what is tilt? It's where you start doing everything wrong. You know that you're losing, you're doing everything wrong, and you keep doing it and you keep hammering it, and you know you're wrong. And you know, it's when you start saying those things like, I'm just going to add a few more, just get me back to break even. You know, you are like, I mean, you're praying. You are like, you have completely removed yourself from reality, and you are. Yeah, that's kind of true there, Lambus. And you are, you know, you've gone beyond charts. You've gone to whatever your higher power might be, and you are hoping that you got some chips in the bank that they'll just get you back to break even. And unfortunately, very often you end up losing it all, you know? And so when, you know, when people start to tilt, um, you need to catch yourself. You need to be aware of what you're doing. The place where I see people tilt these days, much less in options, you can't really go tilt in shares. I mean, you can if you're trading, if you're, you know, long in things like NMDM at the highs. But I see people tilt in funded accounts. You know, they've blown so many, they have such like you know, a complete detachment to the money. They say to themselves, you know, oh, it's only $30 or whatever for a new funded account. So they don't care. They full port them. They don't care, you know. And then uh in options, when you do it, it's it's like it's the most horrible thing you can do to your account. And it's something that, you know, why I said this is the bad one and then the sad one. Tilting is oftentimes what ends a day trader's career. The one wrong tilt. And so, you know, why does it happen and what do people do? And like I said, you know, the main thing that happens to people is averaging down. And so if you are one of those people that keeps adding to trades, you keep doing this, you keep doing that, uh, you that's when it goes wrong. Today we're going to use the market today. As I said, I always try to take everything back to the charts, and there is nothing better. You know, there's nothing better that you can see on a chart than tilting. So today, and you know, I'm gonna talk about even me, you know, I'll include myself in this. I didn't tilt, but I will talk about my logic and I will talk about what kind of protected me from it. So you guys know I'm into economics, I'm into fundamentals, I'm into all that stuff. So I really like to yeah, I love you guys. So I really I like fundamentals. I like all the, dumb stuff in the market. I like to read the data. I like to look at jobs data. I like to all of that. I like to look at all of that stuff. And it does sometimes help me build a little bit of a bias to the market. Sometimes that's good. Sometimes that's bad. We've all seen, and today is an example, bad data come out and the market rally on it. And so this morning, I look at the data that's come out, inflation has gone up. Unemployment's gone up, and jobless claims have all gone up. So I look at that as, hey, that's not what the market wants to see. That's not what the Fed wants to see. So I actually went into this morning. We had this very obvious little zone right overhead, 654, 654 to 655, whatever in there. And I said to myself, I got to short the first rejection of that. I think I did take a little scalp off of it. But I was bearish going into the day, and I was bearish with valid reasons. There was reason enough to not be looking for an upside move today. Then we had this interesting situation where, for the most part, and while this is actually good kind of for the market, this wasn't a tech-led rally. I mean, we had Microsoft obviously doing, we'll ignore the after hours, but we had Microsoft obviously doing nothing, still holding that big 500 level, but not really doing much. Nvidia selling, there wasn't this buying pressure in the market. It was everywhere else. So RSP, if anybody doesn't know what this is equal weighted SPY. So you don't have to, you don't have the different weighted things. So when this is going up, and tech isn't, that's telling me that most everything else in SPY is going up. But so how could you tilt on something like this? And so, we can look at this and we can say, even early in the day, tech was lagging. Tech was selling more and more, and then eventually did nothing. We see it in the charts. How could you end up tilting on this? Well, like I just said, I just gave us, we know that tech moves this market. And if tech's not rallying, we likely shouldn't be looking for a huge rally. Bunch of bad data, a whole bunch of reasons to be bearish. Well, that's how you tilt. That is the leading thing of tilt. The what makes you do it is a bias that you can't kill. There is no tilt without a bias, and specifically a bias that's incorrect. So people have heard me say it a lot. I personally don't struggle with trading psychology. When I'm wrong, I just click sell and stop out. I don't care. And then I do the same things in my head. I look at all the market, I look at all these things and look where the charts are. And I say to myself, hey, even though everything makes me feel like this market should go down, this market is going up. So I'm going to trade the upside. Well, a person who's tilting, they might, short this. Valid, completely valid. Then you're wrong. So you stop out here. Well, the person who tilts, they're going to add. So, you're going to take your very reasonable short entry right here. We've had a couple of rejections. You can give it a try. Then they're going to add and they're going to say, nah, this is, fake breakout. This is going to pull back every reason. Keeps pushing up and they see, oh, wick downside. I'm going to add here. Sellers are showing up. They're going to crush this thing back down. Another push up to a level. Oh, they're selling. Oh, look, you can even see my trend here. I did take shorts here, don't get me wrong, but they said, oh, we're selling. We bounce back up. Oh, we're selling. All of a sudden, this person has their entire port in a trade that was supposed to be a scalp or a small move to the downside. This chart shows you how tilt happens, like absolutely perfect. And it's like I said, it's one of those things in the market where these people, you start hoping and you start just wishing that something is going to save you. We're going to get a dump. We're going to get a big knife. And that big knife or that big dump never comes. And this late in the day, you're in some short expiration contracts, markets move wildly against you. You don't even have a shot. And that's typically the ending part of tilt, is you do nothing. Like there might even be some money left and you don't even do anything. You don't even care. Like you've given up. That's, the final stage of tilting is all of a sudden you're extremely over leveraged. You're down a gigantic amount on your portfolio and you give up. You say, oh, these are dead anyway. I'm just going to hold it. And ultimately, you lose it all. Roro, I'm seeing all these comments in here. Roro, I just saw that one pop up. It's everybody. Are you kidding me? It's everybody. I mean, it's everybody. Everybody has done this. Every SPX trader has done this. I mean, every SPX trader has done this. I'm telling you right now, you know. And so this is tilt. We're gonna move on from tilt. Tilt's a hard thing to break. Once it starts, the issue is the money is gone. And that's what people have this gigantic issue with dealing with. So tilting is a thing that once you've done it, if you can identify it early, uh, you got to stop out. You got to admit you're wrong. If you can identify it early, it's one of those things that unfortunately there is no coming back from it. Your money is gone, you know, and that's all there is to it. Maybe a miracle can happen, but generally speaking, your money is gone. And so how do we avoid tilt? You never add to a trade unless it is part of the plan. You guys have heard me a million times say, if all of your trades are going down 20, 30, 40, 50% and you aren't stopping out, your entries are bad. Like, I don't care if you're down 50% and your trade comes back to up 5%, that's a bad trade, no matter how you add it up. You got what, 1 risk, 10 reward on that trade so far. It's a bad trade. So with tilt, you stop. With the other thing, there's not much we can do to help with tilt. However, the next ones we're going to talk about, the 2 main ones that I see all the time, easy to deal with, easy to talk about, and you always just have to ask yourself a couple of questions and you can always get through it. So next one that we're going to talk about is greed. Greed is the next most common thing I see right after tilt. It is the most common port blower. Greed is a funny one because one of the issues with it is that everybody thinks about greed to the upside. We see it all day long in trade floor. Oh, I'm up 175%. Should I sell? Like, yes. I mean, I'll just put it out there for anybody in here. If you are green and you are green enough that you are asking some random people on trade floor, I'm up X amount, should I sell? The answer every single time is yes. If you are happy enough to be asking if you should sell, then yes, you should likely be selling. Well, the side of greed that people never talk about, and it's kind of a greed / overconfidence situation, is when you're in the red. And it's weird to think about it this way, but when you're in those trades that you're down 40, 50%, people start getting confident and cocky and, oh, I don't care, it's going to come back. Oh, we aren't even worried, look at this, look at that chart, look at these lines, blah blah blah. Oh my god, you guys are cracking me up. Look at all these lines, blah blah blah. Who cares if we're down 50%? Look at all this reason to stay in the trade. Well, what I always try to tell people when they start thinking like that and they start having this level of greed and this level of overconfidence when they're deep red of, oh, I'm not even scared, I'll be green again. And then they show you all these things on the chart. Well, if you have all these things on the chart and they were down there below you, why did you take the trade in the first place? If all of your reasons to stay long are now where you're sitting, and then but that's not where you were buying. All of your reasons to buy are, it's those people when they're down 40, 50%, they start getting confident and they start giving you all of these reasons they're in the trade. Oftentimes, those are valid reasons to be entering the trade. But by the time you're down that bad, you should have long stopped out on that trade. And so greed is this funny thing that people will always get overconfident when they're big green and they will get overconfident when they're big red. And in reality, the best thing that you can do is trade the chart. I talk about it all the time. Any good trader not saying I'm a good trader, but any good trader that, teaches real trading, they'll tell you the same thing. The only thing in trading that is never going to lie to you is the chart. The chart is the 100% truth all the time. And the chart tells you where you should enter, stop out, and exit every single trade. And so nobody when trading should be so confident that they ignore their rules. I get DMs about it all the time of, oh, I took this trade and the person stopped, said their stop out was 20%. Well, it went down 50%, but now they're telling me it's green and they're making money. Why did I stop out? And they are upset that they aren't still in the trade. But what they're ignoring is that they actually followed the plan. They did the right thing. And I know it is weird to think about, but sometimes on a good trade that is traded correctly, you lose money. I know that's a weird way to think about it, but you can do everything right. And as long as you follow your plan is going to work or it's not going to work. And as long as you follow your plan, even on the not working side, you will start to make a lot more money. People don't ever think about the value of an option contract and what they have to do. And if I say I alert an option contract and it's $50, we don't expect it to go to 100. That's 100% return, and you should never expect your trades to go 100%. Sometimes they do, it's great. Sometimes they go 20% and that's it. Also great. But you don't buy the $50 contract expecting it to go to 100. So when you buy $100 contract and you now go down 50%, your contract is now worth $50. Well, you have to ask yourself, if I am that does happen on occasion. You have to ask yourself, if I bought this contract at $100 and it's now at $50, if I was buying it right now, would I expect it to go to 100? No, because you should never expect a 100% return. Well, your contract that was $100 and is now $50 now needs to double in value to get you back to break even. So that is where the greed issue comes into play. People don't ever think about what they are expecting out of these trades when they're down that bad. And I say it all the time. When you have a trade that's absolutely smoked and it comes back and it makes a little bit of money, I'm happy for you because, I want everybody making money. I don't care how you're making money. As long as you're making money, I'm happy for you. However, that was a bad trade. And as I always say, if all of your trades go deep red before they go big green, or even a little bit green, that is an entry issue more than anything else. And so always, yeah, they do. We had a funny one in Voice Chat today. That sell was too money, huh? I sold it right here just for it to do that. And so, or maybe it was this one, maybe I sold it right here for it to do that. So don't be greedy. Don't get overconfident. Don't worry, don't be that person. Be the person who takes the trade at 100, stops out at 80, rebuys at 50, and then you get to sell your trims to the people who, the other people who are deep red that are just trying to stop out for a smaller loss. You get to sell them, your trims. You are already green. I don't care, if you have day trades. I don't care if you have scalps. I don't care if you have swing trades. Your plan needs to not promote greed. So on the downside, you need to be ready to quickly admit you are wrong and look for a new entry. That is always going to make you and lose you more money in the long run. There's no reason to hold those deep red trades hoping they come back, even if it's a swing. I don't care if you got a month's time. I don't care if you have 2 months' time. Once the trade plan is invalidated, you exit the trade. And so, how does this work on the upside? Very similar way. I can't think of a high flyer right now. But so when we're trading, we need to be reasonable, never greedy. You want to just be reasonable. So you don't ever want to be the person, we got a few of them on trade floor, and don't get me wrong, are they right sometimes? Absolutely. But you don't want to be the person on trade floor giving the absolutely wild price targets. Don't get me wrong, you get to take your victory lap, once out of 30 trades or whatever it is, and you bring it up for weeks. Remember when I said, 648 or whatever it was, that yeah. Oh, I got it, dude. You guys are cracking me up tonight. And so you don't ever want to be that person. you want to be reasonable. So you want to, okay, we buy SPY. We've broken our level, you know, as I said, always take it to the charts. We buy SPY, our target's right here. We know this is like new all-time highs or whatever it is, you know, our target is right here. That is a reasonable target. We're going from one point to the next point. This is all part of a plan. If we enter here, our stops are down here. Final target is up here. Don't be the person buying at 650, 450 saying, are we going to 660 today? You know, you don't want to be that person because, well, I mean, it doesn't really matter, but rest assured, a few of us are probably making jokes about you in the DMs, you know, be reasonable, give real targets. Don't be the person who, you know, oh, you know, Apple's down today. I think it's probably going to go to 275 tomorrow. Like, don't do that. People ask me all the people ask me all the time, you know, will X stock go here? And I always tell them, I don't know. But what about, you know, this and this and this in the middle? You know, we had, yeah, I can actually give an example from voice chat. I hope the person's not in here because I'm not trying to be mean or anything. But we did, as I recall, we caught this early short. And then I said, I'm just looking for a push down to these EMAs. And their initial response, and again, if this person's in here, not trying to be mean, just using you as an example. So we were up nice. I don't remember what we made on these. I don't know, 30% or something. And I was like, okay, here's our EMAs. I'm taking it all out. And then they instantly say, oh, I think we're going to pre-market low. Well, pre-market low is way down here, $2.50 or whatever below us. We've already caught this nice move down. So how does the chart help us control our greed? We just start looking left. And we say to ourselves, well, the market could bounce here. The market could also bounce here. The market could also, and very likely, bounce here. And maybe we could get down to these wicks as like a fifth final, you've trimmed everything away, but you need to be realistic. Don't be the person buying SPY looking for, you know, $3 moves in one direction. When they show up like it did today, awesome. But you know, if you had 658s early in the day and then you rode these all day long, you gave back like most of your profits being greedy, looking for the rip to the upside. Because these things just got gobbled by end of day. And so always let the chart control your greed. I tell this to people all the time. If you ask me a question about a trade, I'm almost always going to say, well, what was your plan? You know, I can show you my chart, I can give you my levels, but what was your actual plan on the trade? And that's, you know, when I teach trade plans, what I teach is, you know, entry, stop out, take profit. All of those, you know, all of those things need to be known before you enter the trade. Is there going to be times where you get this, you know, you get your move from, you know, you go from point A to point B and then you sell and then it keeps going? Absolutely. However, this is one of those great examples of take the trade, when your level breaks, it gives you a retest, it shows you a couple bullish candles, buy it. And again, you can make your same trade plan. I'm buying here, my stop out is down here, I'll trim at first target. If we get a nice pop, you trail your stops up. That's it. I'm sure some people probably caught SPY right here, and then they held it all day. And by the end of the day, they were likely very red on whatever trade they were in. And so let the market tell you what to do. The person who catches this move gets stopped out in profits, looks for the reentry, and then catches this move, makes more money than the person who just holds. So always enter where you plan to, stop out where you plan to, and take profit where you plan to, and you'll have consistency. And that is the best way to fight greed. Let the charts tell you what to do, trade your plan, and you will have like you will find yourself having a much more likely success. And so final thing we're going to talk about, and then open it up to all of you, is FOMO. And this one's easy. Everybody feels it. I'm going to use this one today. Open. Absolute ripper. Everybody wanted to buy this thing all day long. You can't like, and I know Robs was in here, stoked you made money, Robs, nothing against you. I wouldn't take open shares for free today because I wasn't in that trade. No matter how you look at it, if you were buying open today, just off the open, you're chasing a stock that's up 30%. By the time you're buying these pullbacks, you are buying a stock that's up 50% on the day. Is this one of those wild days where, hey, it actually worked? Yes. But 9 times out of 10, you start looking at things that are absolutely ripping, start buying big green candles, and that's when you start getting stuck in stuff like this, or you keep looking for breakouts to come. Big green candle comes, smokes you. This is the much more likely situation when you start chasing. The leading cause of FOMO is candles big in a direction. People cannot resist the fact of, like, they see a big green candle and all they can think is calls. They see another big green candle and all they can think is calls. And by the time they are starting to buy these highs, the market is about to chop you around, likely make you be red for a little bit and panic, and maybe make you some money or maybe lose you some money. So the leading cause of FOMO, no questions asked, is chasing big moves. There's days where it happens and it works really good. Or there's days where you get an Oracle move. Explosion. Everybody was buying calls. People in trade floor are saying, I'm an Oracle 400 calls, no questions asked. And then dump it. And then dump it, And so there is times and places where you're going to make some nice money. And there's other times and places which, statistically speaking, you are much more likely to get clobbered. I mean, the people chasing Oracle just caught a 10-12% down day against their calls. And so that is what causes FOMO, is big directional moves, and people feel like they need to be a part of it. And by the time they finally chase it, they lose money. And so, like I said, is there times and places where it works? Absolutely, but again, statistically speaking, not even just experience, you're going to get blown out doing it more often than not. Chasing those high flyers is never going to be a good move. Waiting for reasonable dips to buy, very, very good move. However, when you start looking at stocks that are up 30, 40, 50% in a day, those are, 9 times out of 10, not something worth buying. Because if you do buy those, you often end up losing money. Those big giant rips are almost always met with some amount of selling. It does not mean short it or anything like that. Again, all trading psychology, doesn't mean short it or anything like that. It merely means maybe ease off on the trade for a couple of days. I can even use another example. It's one that everybody wants to buy, TTD, myself included. Everybody wants to buy it. The amount of people who have hammered TTD in this 50-51 range over the last few weeks is crazy, because yes, it's nice solid support. We can even look left on the chart and say to ourselves, hey, it is nice solid support. I was waiting to see some real amount of buying. We want to see buying down here. Everybody thinks it's time to buy, it's time to buy, it's time to buy. And then finally we get this, and don't get me wrong, it was putting up some, 10% upside moves multiple times. People were chasing this thing all the way to 55, getting smacked down, all the way to 55, getting smacked down. You need reasons to be entering trades. You can't just look at TTD and say, oh, it's up 10% in 2 days. It's going to fill this gap to 90. You can't think like that. You need to think in reality, And so just be careful. FOMO is one that it's generally speaking very, very easy to fix when people have it and you acknowledge that you're a chaser. If you have FOMO, you are a chaser. You can't really have FOMO without being a chaser. They tend to go hand in hand. But if you find yourself being a chaser, just acknowledge it and understand the most, one of the simplest things in trading that people always forget is there's always another trade. There's hundreds of trades to be had a day throughout the market. And so if you miss one, who cares? It's not a big deal, live in reality. Buy dips when presented, short rips when presented. trade what the charts tell you. Big green candles are often met with a couple red candles. So say to yourself, after these big green candles happen and a little pullback happens, then do I feel comfortable buying? I mean, we can even go back to open today, just because I know a lot of people were trading it. Are these reasonable enough dips to buy? Theoretically, yes. You just have to understand you're playing with fire because you're chasing something that's up 50% on the day. If this was not up 50% on the day, these start to look like much more appealing dips to buy, selling us down to major support. But the big candle chasers got smoked most of the day. They see the breakout and they ultimately get chopped a little bit and sell. And so most large directional candles will ultimately be met with some amount of pullback. So it's always just best to wait. And so with that, that's all I got. There's a ton of messages.
Say River.
Uh-huh.
So I just wanted to run it down what my thought process on open was this morning. So I
knew you were going to want to defend yourself.
well, not really. I mean, so there's a sentiment going online, all these people, and I know I used to be a chaser, so I kind of played that to my advantage, knowing that there's going to be a shitload of people chasing this thing. And I used the hourly 21 like how you got on there. So what my plan was, as soon as it like dipped under the hourly 21 there and then came back above it, I took the entry and my stop out was literally under that bottom wick. That was my plan. If it stopped me out, whatever. And it just ran.
Yeah. And it just ran. And that's what I said, and I'll happily use this example because, I can teach about FOMO, but I'll tell you right now, there is times in the market where the FOMO traders absolutely print money. And here's one of them, I mean, even if you weren't in open, you still caught a 40% upside move intraday. So, I mean, I will not in any way, shape, or form deny that there are times where the FOMO traders absolutely print, but I just, that's just too high risk for
people
me.
People on X out here are like, open's going to $80, and I'm thinking,
yeah, and it's right. I mean, dude, it's one of the it's the Twitter favorite, just like that Zeta one. I mean, did you see? I know that this is another one a couple of people are in. I mean, this move on Zeta today off the lows is just insanity. 12%. I mean,
gonna go to 80? Probably not, but I know a lot of people probably were seeing that and they were gonna think the same thing, So I was like, these chasers are about to start pouring into this fucking stock, dude. And I just kept a tight little stop.
They did.
And they did. They fucking did it.
And the volume's hilarious.
Yeah, dude.
Over 1 billion volume traded on it today. Yeah, that's just insanity. Oh God, dude, I'm reading some of your messages.
Hey, the price action is just a bunch of people's mentality,
Yeah, it is. Really, it's the traders on a chart, Well, it's mostly the algos these days, but dude, that ninja is triangulating Tesla price targets. You guys are cracking me up over here. CR hit on wow, sick. And see, dude, yeah, look at that. Your open shares from $4. Those are a completely different situation. Yeah, you stick with those, but like you weren't buying this morning at 7.5 after the rip, you were up big. Nice hit there. Yeah, none of that, I see people asking about stops too. I manually do stops myself as well. There's, I'm all about manual stops, and my stops are always based on something on the chart. And so what I do is anytime I see a big breakout candle, my stops move to the bottom of the breakout candle. So you can see right here, more breakout candles. My stop would have been right here. It unfortunately ultimately would have ended up being the spot to buy as well. But I always run my stops under any previous breakout or breakdown candles. So because when you have those big directional moves, oftentimes a pullback. So when I take trades, that's what I do. I look at the candles. I look, where are we opening? Where are we closing on the candles? And are the candles going in the direction I want? So as long as we have candles, most candles closing above their midpoint and above their opening price, I'm likely going to be sticking with the trade. When we get strong, we'll use bullish candles. When we get strong bullish candles to the upside closing near their highs, my stop moves to the bottoms of those. Strong bullish candles closing at the top near their highs, Your stop
Yeah,
goes to here because
I
you know, generally speaking, if you get under these major levels, that's where breakdowns come. Of course, there's days like today where it absolutely rips, you know, and don't get me wrong, you should probably, you know, if you're in short-term trades, this probably should have been stopped out of considering it's a 7.8% drop on the stock.
that's exactly
So
where I stopped out today.
yeah.
I rode all
And
the
so, I
way.
mean, a stock is all of a sudden moving 7% against you. And, you know, I mean, at the time, a pretty dang aggressive fashion. You know, these are like, there's like little to no bullish candle in here until ultimately the reversal comes. But there wasn't a lot of reason to be staying in long trades through this kind of a pullback. But again, if you're in them and you're up nice, then you're printing, you know? Oh,
Yeah, I
yeah.
had my stop probably right there at that blue circle you got drawn there.
Yeah.
That little blue circle.
And see,
That's where
if I was long, this is likely what ultimately would have stopped me out. I would have let the little pullback to previous support happen, the bounces happen, but I say to myself, if we get under here, we're going down a little bit more. And so we went down, retested, ultimately went down a little bit more. I know that's more price action. That's not this lecture, but that's what I do. I always, always, always let the charts tell me what to do. Oh yeah, you remember FOMOing into some AFC? Yeah, dude, coach, man, he hit a giant on that one. Um, okay, so with that, again, open conversation. Anybody have any questions? Any of this apply to you? Anybody have stories, or you know, if you want to ask about a trade, how you could have traded it better? That's what this lecture is for. It's for all of you guys. I tried to hit on some topics that I feel like every single person struggles with, and the ways that I like to avoid them. So does anybody have anything else? Any other, you know, trading psychology issues that you have? Anything like that?
So I don't know if you remember in previous lectures, but I was telling you about how I was struggling with hesitation.
Yep.
Oh, that's since getting better with that. And I've just been swinging that bat a little bit more, man, and it's it's helping.
Yeah. It's
You know,
one of
as
the most
long as I
important.
have a plan and my stop
Yeah.
is in a decent spot, it's like I'm either right or it's like you were saying, I'm either right or wrong, and I accept it, or I just take
Yeah.
the L if I have to. It's like
And that's what I always try to tell people to do. You know, one of the hardest parts in trading is building confidence. But one of the double-edged swords of that is building entirely too much confidence too fast. And so the easiest way to really start working on building confidence on your trades, trusting your plans, trusting your trading psychology is size down and swing the bat. You know, if you normally trade $300 positions, well, start trading $100 positions. And taking a couple more of your own trades and really trying to, you know, see is what I'm doing working. Because people, you know, there's like a couple of the Furu guys out there that they push like back testing. You have to back test. Oh, you know, if you haven't back tested for hundreds of hours, then you don't know what you're doing and blah, blah, blah. And you don't know how consistent you can be. And absolutely, you should, you know, do a little bit of studying on whatever strategy you're trying to trade before you actually start risking your own money on it. But the issue with back testing is we can all go back and look at a chart and say, oh, Open likes to bounce off the 20 EMA, you know, and it bounces off the 20 EMA, you know, X amount of times out of X amount of touches. And that's great. The difference is when the charts are moving, your back testing kind of gets left to the wind. I mean, you know, in the back of your head, 20 EMA bounces work, but when a chart's moving, that is where the real test comes. And so you size down and you start swinging the bats. You say, okay, yeah, you know, Open likes to
that's
bounce the 20
what I did,
EMA.
bro.
Yeah, and so Open likes to bounce the 20 EMA. So you try some calls. You look left, you say, okay, reasonable enough. I'm buying this dip to the 20 EMA. My stop's going to be, you know, if you trade opening range or whatever, opening range, previous highs. If we're under that, then I'm stopping out. Ultimately, you get stopped out. A couple minutes later, you know, then you say to yourself, okay, when you know, Open breaks over the 20 EMA and retested, it likes to bounce, I buy it. And then you say to yourself again, okay, I'm buying here. My stops are under previous lows, opening range, virtually same setup on the trade, and you're looking for your previous highs somewhere up here. That's your plan. You trade your plan. You don't buy here. Oh God, it's going down. Oh, well, it could bounce. Oh, maybe it's going to bounce to 50 EMA. Then it bounces and you're super happy, but you aren't even green. And then it starts pulling back again. And then all of a sudden it's bouncing again and then pulls back. You're probably still not even green right here. And they finally get a ripper and you're like, I told you so. That's not good trading. taking your entry, following your stop, looking for a re-entry with same thesis, same idea to support it. And you see, ultimately, you're buying around the same price. So if you like your plan once, you should oftentimes like your plan twice. If you like your plan once and then you like your plan twice, and both times you get stopped out, probably don't like it the third time. It's obviously not working, so you just need to move on.
Dude, I can't tell you how many times the hesitation has caused me to like miss out on a trade that I was right on. And then I
Yeah,
realized that hesitation was linked to like the fear of losing money. And then I realized that that was because I was trading too much size, you
yep.
know?
Yeah,
So
and
when I had
that's
less
always one of
size,
the big parts is sizing down. And sometimes you're gonna miss trades, because you hesitate. And it happened to us. I mean, I just know this one off the top of my head because I was mad about it. So it happened to us on Amazon here a couple of days ago. So I don't remember. I think I was looking at the 4 hour chart and I was like, okay, this 231.26 was like the explosion point, here a few days back, and we're finally getting a hard sell to our first sell back to it. So we're watching Amazon, and I say to people, I'm like, oh, I like Amazon here. And then I said, if we close above this level, I'm probably gonna buy it. And then I say, I should probably just buy it here as we're going back over it. Candle hasn't closed, and so I'm hesitating. It's ripping, it's ripping, it's ripping. And then by the time it's, I'm like, okay, yeah, the reversal has come. I've missed the trade. A couple of people chased it, made money ultimately, but I didn't chase. I had missed the trade. And so that's the thing people struggle with. They always, and I mentioned it a little bit earlier, they think they need to be in a trade. They think they need to catch every trade. One of the most common things people do in here, they're always like, oh, when is this random person that mentioned one good trade on Tradefloor getting a tab? Love OT with all my heart. Love all the people that work here. The last thing we need is more analysts. I mean, there is 20 alerts a day. There doesn't need to be more trades than that. If anything, trade less. And who cares if you miss one? Who cares if you hesitate? You swing the bat when you can swing the bat, but if you miss one, who cares? There's gonna be a million more. And so ultimately, Amazon took the nice pop, dumped back down. I decided I didn't like the trade enough to try it again, thankfully, and sold. I don't, who cares in the long run? Nobody should care because there's always more trades, something that I talk about, and I always bring this up, and I always bring this up in my classes. We have a friend, and we always joked with her. She's fixed the issue by now. But ECE is every candle entry. Some people look at a chart and they think every single candle is offering them an entry. It's not. You always need to wait for your plan. Another thing that I'll see people do, swing traders, they'll close a swing and then all of a sudden open a swing on a new stock, and like instantly within a minute, and the market just doesn't line up like that. You are likely either selling the first swing at an exit that it's a bad exit. I won't say a bad exit, but there's no reason to be selling, or it should have already been sold. And then the next trade that you're taking, it's likely not a good entry. You're just trying to get yourself in another trade. And so what I always recommend to anybody in here, find an analyst or find two analysts that you like how they trade. Their trading makes sense to you, and stick with them. It's of course easier with Nando and myself because we're in voice chat and we do give more trades in there, because we can tell you guys what to do more actively. But find a couple analysts you like. Don't hit, an MMA trade and then take a random 1K trade and then take a random Nando trade because, for whatever reason, you're probably going to take the losers. And so always be cautious with your entries. Always be patient. Don't feel like you need to be in the trade. Find a couple analysts you like. Try to pull up the chart and see what they see. And take that trade, or if you don't like the trade, don't take the trade. But sticking to a couple people, letting the charts tell you what to do, and all of a sudden things will start making a lot more sense. See a couple things on here. Yeah, man, I trail it.
Dude,
You guys are
I
crazy.
think I've taken like a fifth of the total trades this year that I did last year, and my ratio is extremely better.
I'll tell you what, my number, My number of trades definitely increased dramatically with being in voice chat. It does promote a bit of over trading for me for sure. Um, but you know, it is what it is. Yeah, and Crash, I agree. You know me, I teach heavily that 90% of day traders will find exponentially more success and exponentially less stress. Um, uh, is trade those cheap names. And for the most part, scalp and day trade. I mean, if you're trading expensive names, scalp and day trade them as best you can. And don't take those things home with you. If you want to swing some cheapies or swing some more like lottos or use, no matter what if you're swinging, only use profits from the day. People never think about the amount of risk that they put on just swinging overnight, it like you have no control. I mean, no disrespect to Six, love the guy. He's demolished right now. I mean, and should you have been short above 500? Well, that's up for debate, I guess, but ignoring all of that, this you got no control. Like, I mean, I hate to say it, but your 495s you guys are in are now sitting a long ways out the money, like $10 further out the money. Maybe it dumps, who knows? Zabes has insane luck. You guys might go in the money tomorrow. But this is a prime example of why swinging expensive names without a port to support it is a bit of a death wish. Because this can happen, and all of a sudden a trade that, maybe it wasn't amazing, but it was fine. It wasn't, I mean, it was down 25% or something, more than I would have held personally, especially with like 50 bounces off of 500. But now you got no control, and now you unfortunately have to wake up to, well, unless it pulls back, blah, blah, nothing's official till the morning. But I can guarantee you, if you are short Microsoft, you're likely going to be looking at Microsoft's chart a few times tonight.
Hey, River.
Yeah.
Had a quick question about you know, you talk a little bit about accepting when you're wrong, and what's been working for me these past couple weeks is, quick scalps. I take my
Yeah.
$5 to $7 on the scalps, whether it's following you or, taking my own trades. And how do you decipher whether it's, you're giving the play a little wiggle room, or like, how do you accept when you know that the trade has gone wrong? Because I'll have a trend line drawn and I'll have a close below my trend line, but then I'm like, wait, we have the 9 underneath. Let me just wait for that. How do you decipher that?
So it's hard because it's hard because sorry, CR, that was a little so it's hard because it's such a trade by trade thing. But you've been a bush out with me a lot. I'm big on market statistics. You guys will basically hear me bring up some sort of statistic in every single lecture that I give. And so, one of the things that I talk about all the time is 80% of breakouts fail. That applies to everything. Breakouts, breakdowns, trend lines, EMAs, it applies to all of it, And so there will be times, and sometimes it works great. I had one. So, God, which one was it? Well, sometimes it works great. I'll call the bluff. Is it the right thing to do or the wrong thing to do? Probably the wrong thing to do. But if I see a first breakdown that's not just aggressive, and maybe I was trading, I don't know, I'm just gonna draw a random trend line. Maybe I was trading this, and I had bought some SPY calls at opening range. I knew I had this trend under me. I knew I had the 20 EMA. This is actually a pretty similar setup to what you just mentioned. It's a first breakdown, strong day. Don't love the opening range right overhead, but reasonable enough that I'll say, I'm gonna hold these for a second. I just have to look at it as, first breakdown on a trend on a strong day that, I'm not trying to jump in front of it short. And my stop, it's going to be under this 20. And it's not going to be a close under this 20. It's going to be, if this bounce doesn't hold, I'm going to stop. Is it under the trend, under opening range, which is a very reasonable stop out? Yes. But this is just an example of a trade that I might hold. A trade that I, in fact, mentioned on Trade Floor and did hold. So I could use this one as an example. I think my trend was even a little higher up. I think it was like right there. But you let the chart tell you if you were trying to run a really tight stop and you get a little bit more breakdown than you expected, but you know you have a bunch of stuff below you, close below you. Not like we break this, you can't be like, well, VWAP's only $1 down there. You know, you can say, okay, we broke down here, 20 EMA in level, I'll give it another 20, 30 cents, maybe. That's a trade I'm stopping out of mid candle when I'm wrong. And maybe I stop out at the bottom and I get all upset, but there's just times and places. And oftentimes I'm going to think of those market statistics. Most breakdowns fail. Most breakouts fail. When I see a small breakdown on a strong bull trend day, I'm likely a dip buyer on that. And that's one of those ones that very hard to teach, kind of just comes with a little bit of experience. So I wish I could give you a better answer, but it is always going to be just a bit on a trade by trade basis.
Yeah, that definitely makes sense. And I know that was more of a chart related question, not a psychology related question.
Well, but it is because it's honestly a pretty good psychology question because you are consciously making the decision to not follow your plan.
Right.
So you need to, you need like a big part of it is asking yourself, like, is this some hopium or is there actually a reason for me to stay in this trade? And it's a tightrope you're walking there. Because when you look at this, this is a breakdown. This is 3 big breakdown candles, you tried to buy the dip at the likely point. If your stop was below trend, below opening range, which to me is a very good stop and like a trade, as I said, that I would take, and I think I did take. I might have taken this one, I don't remember. But this is a trade I would take for sure. And when I would have violated my plan. So like I mentioned early, I don't have a huge issue with trading psychology. I'll say to myself, okay, I'm going to be risking an extra $6-7 on these contracts to hold a little bit longer. Am I okay with that risk? And I always, I've done this for a little bit, so it comes a little bit easier to me. And I probably do things that I don't really consciously think about. I just make the decision. But if you're deciding to hold something like this, you really have to be ready to say, okay, I am in fact wrong, and just exit that trade. So in my opinion, it's a very good, trading psychology question, in all honesty, because like you said, you've traded with me in voice chat and there's a chance that you've been in there that I have mentioned where I plan on stopping and I might have held past that. And I encourage you, if you're ever in voice chat and I do that, ask me why. Put me, I encourage you to put me on the spot, and I better have a good reason. I better not just be trading on hopium myself,
That makes a lot of sense. Thank you, River.
Yeah, of course, of course. Yeah, dude. Wax has one bad day and you guys all hate on him, dude. You guys are crazy, dude. Gives you like a fucking 200%, like 800 to 2,500 bucks the other day, dude. Yeah, we all have a rough day. We all take losses, or we all have trades not work in our favor. You guys are just quick to pull out the pitchforks. Like, whew, couple bad trades and people don't like you no more. It's definitely one of those hard double-edged swords of being an analyst in here. It's also why you guys you'll never see me alerting swing trades. I'll tell you what, Zaves' DMs are a war zone tonight. I can almost guarantee you. Okay, well, any other questions? Love the questions tonight. Thanks for listening to me talk. Like always, I really appreciate y'all for being here.
River, can you hear me?
Yeah, Josh, how we doing?
Yeah,
I know. You're all right. Yeah, you're all right. You're all right.
Yeah, I haven't gone full tilt like I did today in maybe over 5 years. I don't know what came over me, but kind of what you described was exactly what was going through my head.
Yeah,
I needed to get out 30 different times, and a lot of my orders weren't filling because it was moving very quickly, and
yeah.
I don't know where in my mind I figured it would be a good idea to keep sizing up. I have like a 10% limit rule, and I went way beyond that today.
Yeah, and dude, I feel so bad for you, because it happens dude, and it comes out of nowhere. And you said you haven't done it in a long times, and unfortunately, it is very often that you go on a really good run, years or days, weeks, months, whatever it is, and then dude, one day happens. I don't know what happens, and people wake up on the wrong side of the bed and they do everything they know they shouldn't do. But I mean, I gotta say, hey, you escaped with something left in there. That's what matters. You know you can do it. You know you can get through it. And I'll tell you what, there's probably a pretty good chance you aren't gonna do that again anytime soon. And so
No.
while it sucks and that money is gone, you can do it. You can do the right thing. Like, dude, you were on a heater. You were on some sick trades. This guy like top ticked Oracle short, and so I mean, you were.
Yeah, I've been on a
You can do it.
super heater.
Yeah, dude, and you can do it. And so that's the thing. Like, the hard step is don't go into tomorrow and try to make it back, because then the rest will be gone for sure. Do what you do what you know how to do, and start hammering it. You'll be back there in no time. You know, maybe don't pull up the weekly P&L for a little bit, but once
Yeah, no.
once we're on to next week, start fresh. That's all you can do. I mean, I got to be honest, my best recommendation for you would probably be don't even look at the charts tomorrow. But you'll get it, dude. You're good. Like I told you, you know what you're doing. You're on the right path. You just had one of those days that everybody dreads, but man, it happens to people. I mean, I've even had trades that have got pretty wildly away from me. And thankfully haven't tilted, but have made some like really, really like bad decisions. And sometimes they work, sometimes they don't. I mean, a prime example of one is, and I can, this is me. So I like this AES stock. Everybody knows I like this AES stock. I was trying to buy up here. I know it's kind of dumb looking back, buying at resistance or whatever it was. And I'm in these at $35 and these contracts and or whatever. And so they're chopping around, and like, and yeah, see, Crash is gonna laugh at me. And so for like this whole week, I was in kind of a dumb contract, not a lot of volume or open interest in there. So I was just kind of nibbling these dips as they showed up. And then like my luck, I mean, I could probably go back and I almost guarantee that this was the day that I messaged Crash and I say, okay, hey, I finally got my full position. Yeah, you did. I finally got my full position, right here. We were like, depending on the spread this next day, I mean, we were minus 90% on that. And so I'm not saying it's the right thing, wrong thing. I lucked out. What did I do? I bought a lot more. I quadrupled the position size, maybe even more. I mean, and it was dumb. Like, I don't know what I was doing. I don't know what came over me. I message Crash that I was doing it, I don't know what came over me. This could have gone so horrendously wrong. There was absolutely no reason to do that. Right up here, I'm telling him, I got my full position size finally. I'm happy. And then all of a sudden, my position size is much, much larger than I wanted it to be, And ultimately, I got saved. That's, I didn't deserve it. Like, I'll tell you that much. Like, I did not deserve to get saved with the degenerate things that I was doing, And so it happens to everybody. Don't get down on yourself. We all do dumb things sometimes. I mean, I had some apples that I did the same thing. And this was this was a while ago. I had some apples and I was just hammering them and I was getting into way too big of a size and I was so confident that the trade was going to come. And then, I had added and added and added. And then I finally just said to myself, I was like, I'm done with this trade. Took the big ol' loss. I mean, minus 80% or something like that. Took the big ol' loss. And it wasn't 2 days later, those things were up like 2000%. So it happens,
Jeez.
sometimes the money's just gone, and that's just,
I've heard,
Oh,
I was gonna say real quick, I've heard that if you take a shit trade and you don't follow your plan and break the rules and you still make money, you didn't really win the trade.
yep,
You
exactly. And that's even, I mean, that's
The
even,
market you got lucky and the market just happened to
like I
help
said,
you out.
that was this one, I got I got 100% lucky. This is a bad trade. Do I still think the trade likely has a good chance of making some money? Yes, but this was so dumb. I should have stopped out. I should have gotten a substantially better contract, and I should have been up nice and green on those contracts. Any stop out loss removed, but I didn't make the right decision, you know? I mean, and so we all do it sometimes. Don't get me wrong, you know, when I am telling you this story, rest assured, I was nowhere near full ported, and I would never get myself into that bad of a situation, but I was definitely in a lot more than I wanted to be in, which is bad trading. You know, I'll tell you right here, that was bad trading on my part, no questions asked. So it happens to everybody.
Yeah, kind of like you said though, like the initial trade was not bad. Looking
Yeah.
at what's been happening the last few weeks, every time we punch in the all-time high, we've been getting some pullback, like nothing crazy. So I
Yep,
wasn't looking for much on the initial trade.
I
It
know.
just kept running away from me.
Yep, I
And
know.
then I closed at a loss. What ended up happening is I went back in with much bigger size, which was the biggest mistake, and that led me down this shit trail for the rest of the day.
And I mean, that tends to be how it happens, because you know the second part of tilt is tend to be sizing up and looking to, you were, and I'm sure when you took that second trade, you weren't even thinking about actually profiting. You were thinking about making the money back that you lost. You know, that was all.
Yeah.
I'm sure that's all that was in your mind. And
I don't think I was thinking much other than that. That was the
yeah,
problem.
yeah, and that's the issue. The second, like, and that's what I talked about earlier is, you know, the second um you know, you detach from the charts, you detach from what's going on. That's when it really, as you saw, tends to start going wrong. You know, once you've got out of the real world of trading, that's when things tend to get a little bit messed up.
Yeah. Gonna take a long time to climb out of that one,
But you'll get there, dude. You will. And
yeah.
dude, I'll tell you right now, it will go fast. It'll go faster than you think. Like I promise you, it will go faster than you think. You're a good enough trader that money's gonna come back. It will. Not tomorrow, and probably not Monday. But before you know it, nice consistent trading, you'll be right back there. No questions asked.
Yeah.
Hi, how we
I'll
doing?
make sure to let you know when I get
Yeah,
there.
dude, keep me up to date. And dude, and again, and this goes for everybody in here. If you guys are ever having a shit day, rest assured my DMs are open and I will talk to you about it. I might be, you know, blunt like I am, but I'm always ready to talk to anybody.
People try to go for too much, man. I feel like, think of this, $100 a day is like what, on average, $25,000 a year or something like that.
Yep.
You know?
Yep.
Too many people going for home.
Yeah, and it adds up quick. I7, I saw your name lighting up. You got a question? Or are you unmuted by accident?
I made $400 a day. But I guess if you work and do that, it's extra.
Do I use any prop firms? No, I do not use any prop. Well, I can't say that. I mean, I've played with them, you know, but that's it. I don't personally recommend them. I think they're a slippery slope. Okay, well, that's going to do it, everybody. Thank you all so much. I appreciate you for being here. Like I said, you know, my DMs are always open. Love talking trading psychology. Great discussions with all of you. And thank you. We will catch you tomorrow for Friday fun, where we ditch all our trading psychology to the side and trade sketchy same day Fridays. So have a great one, everybody. We'll see you tomorrow. Yep, I appreciate all of you. Thank you all so much for being here. Thank you.